Hey guys, welcome back to the midweek market update. My name's Joel Frank, market analyst at YouTrading. Let's jump straight into what's been going on in markets, because this is probably one of the most interesting midweek market updates I've done in a while. We'll start by looking at the dollar and we can sort of talk through why. As you can see, if I zoom in, I've got it on 4-hour candlesticks here. The dollar surged, or the DXY surged to fresh year-to-date highs. It's currently above 95 this morning. The catalyst for that surge was Wednesday's consumer price inflation data in the US, which came in much higher than expected. The headline year-on-year rate was 6.2%. I think the core rate, so that was up like 0.8% versus September. The core rate also moved higher. The month-on-month rates were higher than expected. And when you looked sort of at the individual components that make up CPI, it was just strong evidence of a broadening of inflationary pressures in healthcare, in food prices, in housing costs. All of those things, it's very difficult to say, oh, it's just transitory. Like when it's an energy price spike, which was part of it, that's easy to call transitory. When it's you could potentially say when it's a food price spike, you could call that transitory as well. But when it's stuff like housing, those things tend to, the inflationary pressures in those areas tend to build up slowly and take a long time to ebb. Or vice versa, if the inflationary pressures in those areas are very low, it takes time to bring them back up. So anyway, yesterday's consumer price inflation data seen as a significant blow to the Fed's sort of stance that inflation is going to be transitory, which is why markets were then betting that the Fed is going to have to be more hawkish next year with rate hikes. So we saw bond yields shooting higher. We saw inflation expectations moving higher as well. And we saw short-term interest rate markets pricing in more aggressive rate hikes next year. And all of that helps the dollar. So that's why we're seeing the dollar shoot through this significant area of resistance here around 93.50 and hit 95. So I've got marked up here. If the dollar does pull back, which is likely, you often see these technical corrections, especially as today is a pretty quiet day. Thursday, it's Veterans Day in the US. Friday, the calendar, there's not really much on. You could see a bit of profit taken, a bit of a dollar pullback, but then if we go back to test this 94.50 level, that's probably going to be good support. Let's look at some other asset classes quickly. Gold, let me zoom in a bit on gold. I've got some significant areas that it has broken above here, marked up. So in response to the inflation data, which triggered demand for inflation protection, which gold is seen as one of the best ways to protect yourself against inflation, gold shot above this key area of resistance in the form of the 1830 level. So you can see going all the way back, 1830 couldn't be broken above. Well, you can see we spiked above it. In fact, let me just put that on a daily chart. This will be a bit easier. I also marked up a few other key areas of resistance. We had one. We'll put it back on the 4-hour chart. Scrolling. Here we go. Cool. The next area of resistance, which we broke above, was around 1845. That was a low from mid-June. Then we even went above the next area of resistance, which was around 1855. So just crashing through these areas of resistance. Finally, we did stop in the mid 1860s, which if you go back, you can see there's this low here that would support and then turned resistance from earlier, like in the first half of June. So yeah, it does seem as though amid all these sort of heightened inflation concerns, real yields remaining very, very suppressed, it does seem likely that gold can continue to press higher. And a couple of big banks have been saying that they're targeting gold moving above 1900. So just something to look out for. Finally, stocks. How did stocks react? Well, it wasn't catastrophic, but stocks certainly didn't like it. You can see Yesterday there was some selling pressure, but this morning stocks kind of recovering a little bit. We had some good news. Evergrande making some payments and avoiding default. That helped Asia markets. Seems to be helping US markets a little bit as well. But we found support here in the 4,630s. That was a prior record high from earlier in November. Well, that was a support. If inflation concerns do continue, and you know, markets start getting worried that the Fed's going to be super hawkish, or maybe Powell's going to get fired or not fired, but not reappointed, and then that might create some more uncertainty. Well, then it would make sense that after this incredible run higher, if I zoom out, you can see it's been this incredible run higher. It does make sense if we get a bit of a pullback. So I've got some levels marked up to look at. This resistance at the 1600 level turns support. That would be a level to watch. 21 DMA here at 4,580, level to watch. And then again, resistance turns support at 4,550. All levels to watch. All subject to dip buying because people have been very bullish on equities recently. But yeah, guys, hope you enjoyed this video and I'll see you all in the next one.